Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, so we have the FOMC today. So you really got the tale of two tapes. You've got the tape before 2 o'clock, then you're going to have the tape after 2 o'clock. So the way the day sets up, the FOMC, they make the interest rate decision at 2 o'clock, and then there's a press conference with Powell at 2:30. So I would expect volatility then, for sure. You can see it here on the daily chart, and I'll show you, you can really see it on the hourly chart. We're just consolidating up here underneath these all-time highs and above the 9-day. You can see we fought over the 9-day for about 4 sessions. We've flattened out above it for the next 3. So here's the hourly chart. I mean, you can really see it here. We're just in a holding pattern. So we'll see if 2 o'clock today kind of breaks the tie, or if they want to run it up or run it down before the announcement, that'll work too. The price it continues to gravitate back to is really 77. So I'll be very curious to see what a hard break of 77 brings if the downside reaction is there after 2 o'clock. If it is, then you really got to look at things like the 9-day weekly pivot. Can they convert these things? Can they convert them on a closing basis? That's a whole other thing. You can trade down to something, and if you don't convert it, it's just support. As far as the bulls are concerned, if you end up with a positive move after 2 o'clock, there's really nothing to talk about until you get up and over the top of 4,200. Otherwise, it's just noise, and we're just kind of ping-ponging back and forth. So off the open today, you've got volume-weighted average price, our proprietary moving average, and the hourly mid-band all sitting between 81 and 81.5. You've got the daily pivot just under 80. So call it 80 to, 79.5 to 81.5. That little two-handle zone is going to have to resolve itself if we're going to get any kind of a meaningful move this morning. After 2 o'clock, all bets are off. We'll get the pre-FOMC price laid out there, and it's up to the bears to get down to the 9-day. It's up to the bulls to get over the top of 4,200, and we'll take it from there. All right. Do not game the Fed. Do not guess what the reaction is going to be in 2 o'clock. That is a very, very dangerous way to trade. Get the pre-FOMC price. It's going to give you a reaction range. Are we making lower highs or higher lows relative to that range? And then are we breaking out or are we breaking down relative to that range? That's a risk-responsible way to trade Fed news. Flipping a coin because you read Barron's on Sunday and you say, well, we're going up, or, well, we're going down. If you take that trade and you're right, you'll instantly bail because you know you got caught with your hand in the cookie jar. If you're wrong, that's when little day trades turn into big swing trades because you want to be right. And you don't want to end up in that position. That's the kind of stuff that'll blow a hole in your account. Don't blow a hole in your account. Wait for the reaction. Trade off of that. Respect risk. Take profits where you find them. All right. Everybody have a fantastic day. Be safe. Be healthy. Take care. Trade them well. Come check out the room, and I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.